Petrobras' new fuel pricing policy was well received by a portion of market agents, with some expecting a radical scenario, with price freezes or import subsidies. Faced with softer-than-imagined changes, the oil company's shares did not devalue, reflecting market relief. For dividends, however, the outlook is not encouraging, in the view of some analysts. According to analysts consulted by InfoMoney, there is a consensus, although the new fuel price policy is not as bad as that verified during President Dilma Rousseff's government, the abandonment of parity with international oil prices should cause a reduction in the profitability of the company, which will spill over into the dividends. Elon Arbitman, an analyst at Ativa Investimentos, explains that the new gasoline and diesel prices will be formed taking into account the customer's cost, valuing the perspective of long-term buyers or those who acquire a larger volume. This will be positive for distributors, such as Ultrapar and Vibra, who may have access to more competitive prices, he points out. Another element of the new policy is Petrobras' marginal cost, which takes into account the cost of opportunity in logistics, according to Arbitman. The analyst points out that, with this calculation, the company can consider both oil in the domestic market and in exports. For this reason, even without a direct relationship with the international price of oil, it is possible that the values abroad exert some influence, he says. For him, even when dealing with a negative change, the market responds well because there are no extremes. The analyst claims that in the balance of the first quarter it was already possible to notice that the transfer price of exploration and production for refining is no longer presented. According to him, the price of a barrel of oil on the international market was part of the revenue and represented a cost for refining. In his view, with the lower prices that Petrobras' new policy may favor, the company's revenues and margins will be pressured. Currently, the EBITDA margin varies between 65% and 70%, a level that should retreat. With a higher margin and a competitive price, more money is left over to pay dividends. Possibly, over time, there will be less left, he points out. For Flavio Conde, an analyst at Levant Investimentos, there are some complex points in the new pricing policy. He considers that the calculation of Petrobras' marginal cost and the opportunity cost encompass a series of factors that may not be easily identified by those who are not part of the company, making the task of analysts and associations difficult. Another aspect concerns diesel. Brazil imports the equivalent of 15% to 30% of fuel consumption per year due to the lack of refining capacity. On the other hand, Conde considers that the absence of a defined periodicity for the readjustment of gasoline and diesel prices, which has been happening practically every week, can be positive for the economy, but bad for Petrobras. If there is an unexpected event and oil shoots up 20% in the market, this high will take time to be passed on, and the company may earn less in the period. In Conde's view, the profitability and dividends seen at Petrobras in the first quarter of this year should not be repeated. For him, the company's profitability in the second quarter will already be lower, and the strongest impact will come in the second half of the year. Only an increase in the price of oil, in the range of $90 a barrel, could soften the company's situation. Although it is not his base scenario, the analyst works with values between $70 and $80 a barrel in 2023. A change in Petrobras' dividend policy is already expected by the market, although the company's management has already signaled that it will not limit distributions to the classic 25% of net income. For Conde, what should affect the payment of proceeds is Petrobras' investment policy, with the perspective that the company allocates up to $56 billion to the wind energy segment. This consolidation, according to him, should occur by 2024. Currently, Petrobras' dividend policy establishes a minimum annual remuneration of $4 billion in fiscal years in which the average price of Brent oil is above $40 per barrel. This amount can be distributed regardless of the company's debt level. If the gross debt is equal to or less than $65 billion, Petrobras needs to distribute to shareholders 60% of the difference between operating cash flow and investments, as long as this does not compromise the company's sustainability. Payments are quarterly. A point of consensus among analysts is that this should change, with the new distributions linked to a portion of Petrobras' net profit. It is the famous payout, a metric commonly adopted among companies listed on the stock exchange. Condé expects that the payout will begin to gradually reduce in 2023, to something around 50% of profit in the second quarter, to then retreat to 40% in the second half of the year. It is with this level that he believes the company will work in 2024 as well. Even with the new fuel pricing policy, Condé still expects Petrobras to pay between $1 and $1.25 in dividends per share this year, equivalent to a dividend yield of 19% to 22.7%. It is still superior to other companies on the stock exchange and other oil companies, he assesses. However, Condé does not have a buy recommendation. He defends that the investor keeps the paper as long as the company continues to be profitable and follow the price adjustments of gasoline and diesel. Stay, but close to the exit door, he adds. For Arbitman, from Ataiva, the resources for earnings will become scarcer. The analyst expects Petrobras' payout to be 30% to 40% of profit under the new dividend policy. Will the dividends dry up? No, but possibly the dividend yield will be below 10%, argues the analyst. According to him, with a return on dividends below 2 digits, the investor will need to assess whether it is worth keeping the shares, given the political risk of a company like Petrobras. We don't have Petrobras in the dividend portfolio, because we believe it's not worth taking the risk, he points out. Daniel Nigri, founder and analyst at Daica de Hoji Risarki, also believes that risk is not worth it. For him, even if the company remains profitable, shareholder profitability will be lower, with lower dividends. The company is already signaling that the dividend policy will be modified and will make new investments, he says. His expectation is that the company's payout will be 25% to 35% of profit, with a dividend yield of 12% to 14% in 2023, of which 7% has already been represented by the distribution of $5.14 billion, 40 cents per share, payable in August and September 2023. Even with dividends above 10%, Nigri argues that Petrobras was never suitable for a dividend strategy, given the lack of recurring payments. For him, a recurring company must have 10 continuous years of distributions, which did not happen with Petrobras, because from 2014 to 2017, the company did not make payments. I invite you to watch our videos about the pre-salt layer and the history of Petrobras. To access, just click on the respective image available on the screen.